Hey traders, welcome back to another video. So let's talk about why majority of traders they are just struggling to push through consistency and really to understand the most important thing is trading, which is the probability game. Today, whether if you have an edge or if you don't have an edge, you will still deal with losses. But the key problem is most people, the moment when they see a losses, if they see any loss, they immediately park it or categorize it as a bad trade. That's one of the biggest problem. So if you look at the chart here, these are all just completely random. I want all of you to just follow along the video and really see what I'm trying to explain here. So let's say today you take a long based on a bull flag, based on any strategy, took a win. After seeing price break through, you took a retest trade as you were assuming that price will retest the price swing high, now becomes support, continue going long, get stopped out. Right after you get stopped out, you take a re-entry at the low, catching the bottom, or what we call a catching falling knife, you get a loss. You then took another loss at the swing low, getting long because you are being too biased. Then you took another low at another long, trying to catch the bottom. So if you were to assess or simply review all of these 1, 2, 3, 4, 5 trades, which one do you think are good trades versus bad trade? And the answer is the first two trades are probably good trade. Why? Because you took a win as you were following along with the uptrend. It's a good win. Sticking to the trend, understanding market structure, trading with the flow. When price comes back here, if we imagine if you were to block out anything after this, it is still an uptrend. Yeah, if I were to put a horizontal line here, you can immediately tell anything before here we're still on a buyer's market. So if you were to go long here, it's also a good entry because you are trading off a break and retest or a simple pullback strategy. But from here to here, it was just you being on a complete directional bias and tilt mode. Because why? You took a loss here, it's probably time for you to take a step back. Took a second loss here because you were being biased on the buy and you believe that maybe the entry level is good, price position's great, you go long there, you were assuming that maybe that was too minor, I'm looking to go long at this major swing low. Sorry, been having coughing for some time. Then this one again, you took two losses, you didn't take the step back, you didn't take the time to properly assess your game plan, assess your trade idea, assess your thesis, whether if they're still correct. You took another long here at 1.3, so another loss, another loss. So these four trades, these 1, 2 were still acceptable. This is a good trade, a good trade, a decent trade. These two were just completely tilt trading. Why? Because you keep catching falling knife. And in our trade club, we have a saying which is, do not catch a falling knife without wearing a glove. That's something that I started and we often use it. Right? Don't try to catch a falling knife just because you believe. As a trader, belief, prediction, expectation, all these are not a good thing, not essentially a good thing. Having a game plan, expecting the market to perform certain way, to move into certain direction, that's good. But right after seeing price invalidates your game plan, invalidates your trade idea, you need to learn how to put your ego down. Because if you were to completely just say, I believe it's going up, if it's going up, going up, going up, going up, what if price just completely invalidate your thought process? There will be times where, for example, in our trade club, or let's have a look at my YouTube channel. You can actually see that I've been dealing with losses. If you look at my recent two recap, you see I took a loss here on pound Aussie. I took another sort of two losses here on pound dollar. All these were good losses. That's why sometimes when people ask me, hey Neil, how can you lose $10,000-$20,000 like from mid-August to late September? I was dealing with a 1.5 months drawdown. I received so many questions on, hey Neil, how do you deal with losses? It's because I often review my performance. I study my journal and I know exactly what I'm supposed to do. So when I'm taking setup according to my checklist, according to my game plan, according to my system, I immediately know this is a good loss. The biggest problem, back to our topic today, which is why majority of traders just seem to be lost, and especially the longer they trade, the more lost they feel. It's because they lost the sense of identifying what's a good loss versus what a bad loss. When they lose a trade, they get emotional, they immediately say, hey, that's a bad trade. No, there will be time like these two trades. You took a long because that according to your initial winner, you took a win here, and the right thing to do is to stick with the flow. Something that I always preach in our trade club as well. When market is proving you right, don't stop. You took a long, the market goes up, hit your target. That means what? Market is telling you, hey, you are in the right direction, let's go. So when market is agreeing with your thought process, when the market is rewarding you, why stop? Same thing goes to these two losses. Although they are losses, but they were good trade. Why? Because you were sticking with the structure. It was until this one and this one where you just keep pushing harder, and without a re-entry management or re-entry criteria, that's when you get caught over trading, over risking, and revenge trading. So re-entry management is also something that we emphasize a lot in our trade club, because without having a proper re-entry criteria, you essentially might get caught into revenge trading, or you're basically just getting caught in being directional biased. And let me just share with all of you. So if you look at my Telegram, you can actually see in our trade club, I emphasize a lot on managing re-entry. We had a lesson on July as well, and I say why having a strict re-entry rule is so important to prevent yourself going into tilt mode. Right, the same thing applies to all of you watching my video here. If you're someone who's always struggling with understanding what's a good loss, a bad loss, or if you're someone who always take 1-2 loss, you get emotional because you're in a drawdown and you want to get the money back, you keep pushing harder, managing a re-entry is something that you must fix right now after you close the video. Right, so go back to it. So 3 good trade, 2 bad trade. So this short here, we can debate that is a neutral trade. So we'll say it's neutral. Why? Because on one side you're trying to stick with you understand that hey, market is probably flipping bearish, so you're trying to go short. But from another side, I would say you probably don't have to take any trade at this point. Just observe the market, and here goes a good trade, here goes a much more aggressive entry, which is also not a good trade. So you can just from this really simple illustration here, I just want to tell all of you the importance of understanding what's a good winner, what's a bad winner, what's a good loser versus what's a bad loser. Because if again, like what I say, if you're someone who keep trying to use the outcome, the P&L, to determine whether if it's a good or bad trade, in the long run you will lost sense of what am I actually doing. Because just now, let me just show all of you again. I was doing a trades review for our trade club members. If you look at this one, so in the trades review, you see I actually wrote down a few key points. Avoid getting emotional on a drawdown, stick to your plan. So I won't play the video because it's is a resource within the trade club. So aggressive trade management will provide both pros and cons. On the good side, you're reducing losses, but on the downside, you're also killing your wins. This is something that you really have to question yourself. On the third point, I said a good setup can be both a winning trade or a losing trade. Believe in your system. Alright, so through this video, I hope all of you really, understand the importance of first thing, knowing how to properly review your journal, to do your journal and to review your journal. Second thing, understanding what's a good loss, what's a bad loss, what's a good win, what's a bad win. Third thing, having a grading system that tells you what's a good trade and what's a bad trade. Because a lot of times you think it's a good trade, you take the trade, but after you do a review, you will sometimes you realize, hey, it's not really a good trade. I'm just being caught being biased. Why do you think this kind of thing will happen? Why do you think emotion will kick in and affect your decision making process? That's because you are vulnerable. Why are you vulnerable? Because you don't have a process. Right, let me show all of you. You are vulnerable / emotional due to a lack of process. So if you want to become a bulletproof trader, the most important thing for you is to plan out every single possible scenario that might happen in terms of trade management, in terms of writing down your daily game plan, in terms of entering a setup. Only when you really understand, hey, when I'm looking to take a trade, these are some of the possible scenarios. When I'm looking to close a trade, these are some of the possible scenarios. So based on some of these scenarios, well, how should I manage it? How should I tackle it? And it's especially important after you take a loss, learning how to take a step back, learning when are you allowed to re-enter the trade, sticking to the initial trade idea despite taking a loss, versus learning how to say, hey, the trade idea is completely invalidated, it's gone, I need to stop pressing the button. Once you really master all these things, you realize trading is not so stressful. The main reason why most of you think trading is really tense, is very stressful, that's because you have not put in the time and commitment yet. Alright, there's a lot of things to consider, there's a lot of things to really back test and forward test, and trading is a lot deeper than you thought. Alright, so that's it for the video. If you like it, please don't forget to like, share, and subscribe, and I'll talk to you later. Bye bye.